Good afternoon, ladies and gentlemen, honorable guests. It's really proud to be able to moderate this panel. First of all, thank you for our keynote speakers. Thank you, Plato. Thank you, Anthony, and also Ken. I guess I don't need to emphasize how important ESG, green finance, etc. to our economy as well as for the future of Hong Kong. This is the FinTech session of the whole CVCF. That actually illustrates ESG is indeed a strategic focus for our FinTech development in Cyberport. Just like how we have been facilitating the development of InsurTech, WealthTech, and virtual asset ecosystem, which we already seen a lot of momentum. We want to make Cyberport a hub for green and sustainable FinTech that supports Hong Kong mission in the green finance and carbon trading space. ESG integration and ESG factors have been developed rapidly in the space of institutional investment, just like what Anthony has explained to us. Before we jumped into how ESG factors affect the VC space, let's warm up a little bit. And may I introduce our first speaker, Stephen, who is the co-founder of PortageBay, one of the key Cyberport ESG startup. Could you let us understand a bit of the latest trend of ESG and sustainable investment, like with your background and with what you are doing from PortageBay's perspective?
Sure. Thank you, Victor. PortageBay, we are a Hong Kong-based AI ESG company, and our mission is really to help institutional investors accelerate their ESG initiatives. And so what this means is we help financial institutions develop their in-house ESG capabilities. We're a Hong Kong-based company and proudly a Cyberport incubator as well. So thank you for having us here today. So in terms of trends that we're seeing investors really focus on a few things. One is really mitigating greenwashing and incorporating more sustainability elements into the investment process. So this includes research, portfolio management, risk management. And there's a couple of trends that I'll just highlight briefly today. So the first is something that Victor, as well as the previous speaker, Anthony, mentioned, is reducing reliance on third-party scores. And this is one of the biggest shifts that we've seen. Investors really recognize the need to form their own views when it comes to incorporating sustainability into an investment decision. Much like if you were an analyst and you were looking at Moody's or credit or S&P credit ratings, you wouldn't solely rely on that to make an investment decision. You really have to form your own view, and I think investors are coming to that conclusion quite rapidly. The second one is really just around incorporating more ESG data analytics toward finding investment insight. And this is partly challenged because there are data gaps in terms of corporate disclosure, but this is improving quite rapidly, in no part, at least because of the regulators as well as investor demands. Investors are also demanding tools that offer them a 360-degree view, both from a qualitative and quantitative perspective. Investors are also really pressed for time. They have incredibly busy days, and they just want to focus on the most important questions. What ESG factors should I look at? What matters most for which companies? How do I quickly do the benchmarking and focus on the most important elements? And so we've developed a solution that addresses many of these pain points, collecting and processing data at a massive scale, making ESG analysis simple, accessible for investors, a generalist investor. We also have the ability to create your own scores in a really simple way. It's no longer a chore, very, very easy to execute. We provide transparent information across the 26 SASB topics, the Sustainable Accounting Standards Board. So you have that 360-degree view. And we provide investors ultimately with the tools to create their own views. And the third observation is really investors are really keen to find ways to scale up their human capital. ESG specialists are very few today, and as well as experienced investment professionals who have that ESG lens are also few, but growing over time. And so the question is, how do we systematically augment the capabilities of these folks to supplement this desire to scale up internal ESG capabilities at financial institutions. And so these are some of the trends that we're seeing today in the market.
Thank you, Stephen. So let me introduce our second guest, Alfred Shang, the CEO and co-founding partners of BitRock Capital. Hi, Alfred. We are very excited to have you here. As an experienced investor in several leading fintech companies, can you share with us what are the major ESG considerations that you might have from an investment standpoint? And also, is there any particular more heavy-weighted factors that you put emphasis on?
Yeah, thank you. Thank you, Cyberport, and thank you, Victor, for inviting me to this panel. We are a fintech and digitalization-focused venture capital. This is our 5th year. We are based in China, in Shenzhen, and also Singapore. But we do invest in Hong Kong local company. I'm from Hong Kong originally, and one of our earlier investment is 1Degree, which is a Hong Kong Cyberport incubator company as well. So as far as ESG is concerned, I think there are a few factors that we really pay attention to. The first and foremost is whether their mission and vision has embedded what we call ESG consistent phenomenon in their company's setup. Because we are a venture capital, we are a fintech investment, we don't specifically target so-called ESG companies per se, but when we look at fintech companies or SaaS companies, the mission that they set out to do need to be consistent with a ESG. So that's the first factor. And then secondly, we also look at how they build ESG considerations into their research, into their technology and product development. We know that, and also talent retention. We know that ESG is increasingly becoming more important among talent, among the younger population in particular, and also within the consumer segment. So ESG, if they can leverage that capability, it's actually a very powerful tool for them to build their business, for them to acquire customers, for them to develop the right product for the right segments and the right market, and also for them to differentiate among for the startups to differentiate among the competitors. In markets like China and Southeast Asia, for example, a particular segment of startups that we look at is on financial inclusivity. In Southeast Asia, as an example, only about a quarter of the population have access to holistic modern finance, meaning 3/4 of the population, they don't have access to modern financial services. They will need to borrow money from the local loan sharks. They will need to transact on cash basis. They don't have credit. They don't have credit card, debit card. And so financial inclusivity and accessibility is a key focus for us in markets like Southeast Asia and other emerging markets. So for us, when it comes to ESG, we really look at the mission, the culture, their product focus, and also the segments that they try to target. Now, at the end of the day, as a venture capital, we focus on financial return. That's our key KPI. So we do need to understand how the startups are going to create sustainable value for their ecosystem, for the segments that they look at, for the society that they serve, and also the customer segments that they target. So being able to monetize on their capability, including ESG capabilities, being able to grow on a sustainable basis and create value in the system is ultimately the most important factor that we look at. But everything is so-called integrated or intertwined, and we do consider different factors when we conduct our due diligence and post-investment, how we serve and how we help the startups.
Thank you very much, Alfred. Yeah, Alfred actually made a very good point that the integration and everything all like comes together. Like Anthony and Stephen also talks about SASB. In fact, for commercial bank, the SASB material topic is one of them is capacity building and financial inclusion, which is echoing what Alfred just mentioned. Like when you look at ESG, that doesn't mean it doesn't help to make more money. Financial inclusion for Southeast Asia, like that helps the financial institution make a lot of money, but at the same time is aligned with the ESG target. So last but not least, we have our friend Dr. Albert Yip. So in fact, I really want to thank him again. He's very busy. This morning there's another ESG conference, the ESG and Green Finance Opportunities Forum. So he finished that meeting and just rushed to join us here. So Albert, thank you very much. And I understand you are like an early advocate of ESG. You have been like practicing ESG for many years, whereas people have no idea what it is. And now you are a co-founder of your own VCs and family office. So in your investment process, how do you make use of ESG to help you to make decisions?
Thank you, Victor, for inviting me and putting me on the stage. Actually, it's my pleasure. Okay, even though it's quite headache running from the previous sections from ESG and green finance that held by the Chamber of Hong Kong listed company as well as Hang Seng Index. I feel so much happier of running to here because I see that we have a very good atmosphere for the ESG, particularly in investing as well as on the green financing. For Syndicate Capital, we said about 20 years ago, we have a strong focus on ESG as well as on FinTech investing. Well, recently, we also established a ESG fund where we have an AUM about 100 million of US dollars. But we try to mingle technology together with ESG. I think in the previous sessions, Plato have a very good presentation about this, how to make good use of blockchain, such and such, right? And well, the reasons why we want to plug in the technology with ESG. Now, if you go back to like 8 years ago, personally, at that time, when I was working in State Street, we are the frontiers and helping on developing the ESG MSCI index. And at that time, I'd like to say most of the focus has been put on the S elements, the society, all right? And nowadays, we find that quite a lot of practitioners, we put a lot of focus on environmentals. Well, this is the thing that I can observe in Hong Kong. In year 2000 time, in year 2020, being a commission members of the United Nations ASCAPs, we have produced a report and found that even for Hong Kong, the NPR fund, there's not too much elements that invest in ESG. So what I can see is there is a big difference during, these 10 years of time. I can still remember the early days when we work on ESG, people see me as a dummy. All right, we have a lot of pushback. When you talk about ESG, something like a CSR things, no one feels interest because it's not money-making things. Until nowadays, environmental, solar energy, green tech, prop tech, becomes something more commercialized. We see a lot of people going into these such as ESG areas. And I see a lot of people giving me the pushback, become the practitioners in the market. Whenever you go to the central, people keep talking about ESG. I feel happy with that because I see the big changes. And in the last 6 months, a lot of people talk about NFT, all right? Well, we are now having the crypto winter and other kind of climate change, all right? And now people go back and talk about on ESG things. I think, what we are still need to look at is the missing part. S and G element is still the missing part in our ESG investments. When we talk about ESG investing, we are still very focused on environmentals. It's always good to think about what is the substance and core value of the ESG. But you look at the environmental things, governance things, it's all for the well-being of this planet as for the human beings, which is the core and the heart of the ESG, all right? So I think when all the practitioners are here, or we see, the key message that I would like to deliver is when you have the investment, try to find out the niche areas where you have a bigger room to explore opportunities. And S and G are always the missing part, but it's quite profitable. When everyone is doing the same things, the marginal return will be decreasing. So try to look into some investing opportunities or having some startup where they really focus on the S and governance perspective.
Thank you, Albert. So going back to Alfred, so I think you also mentioned a bit about your invested portfolio. I happen to be the judges for the insurance award, so I get to know the campaign from 1Degree, which is pretty S focused. So can you tell us some of these interesting ESG stories of your portfolio company, and do you actually orchestrate those development as an investor?
Well, no. So in the interest of time, let me tell you two examples. But to answer that question, we are a venture capital investment, so we typically take a minority stake in the startups. We do participate in their board and help them set the overall strategy and direction. But when it comes to specific product development and the tactics to go to market, is entirely up to the CEO and the management. So on 1Degree, I do believe Alvin Kwok is somewhere either in this room or outside, so do talk to him if you're interested in InsurTech and how ESG is going to be helpful in that area. The example that Victor mentioned is their recent, or not so recent, a few months ago, which is a advertising campaign, and they developed a home insurance product that include the segments on LGBT to be an acceptable customer segment to their customer base. And I think that on one hand is an inclusivity innovation. It is a segment that has been excluded from the financial services community for quite some time. And because of the data availability now and also other technologies that 1Degree developed, they're able to include the LGBT segments in that. Now, in addition to that, I think that campaign, including the product, the advertising, and some of the social media campaign help enhance the brand image of 1Degree. I think it's also beneficial for the talent, so for the talent recruits and the development within that company. So that has been quite a successful campaign as far as I'm being told. I do believe, Victor, you're part of the judge, so there's recognition and endorsement from the community as well. So that's one example. Another example I can share is there are a lot of supply chain finance companies in China and in other markets as well, including trade finance tech companies. They have started to leverage blockchain and AI technology to digitalize some of the data that they have, the data along the supply chain, the data along the trade flows that integrate logistic data, warehouse data, the actual physical goods, and also the IoT data. Now, what that benefits is, it's again back to the theme of inclusivity, because with all the digitalization and with all the data available, they're able to work with commercial banks and other money lenders to extend credit to the SMEs, especially the smaller vendors. So think about the tier 3, tier 4, tier 5 suppliers along the supply chain. And so that's how FinTech is able to help with the ecosystem by extending credit to the SMEs, and how technology is able to provide the facilities. Even though the company as a startup, they are probably not thinking about ESG per se when they started the business. They were looking at how finance are being derived in the supply chain and what are the pain points within the SMEs, and why do banks and money lenders do not extend credit or did not extend credit to those companies. And they try to solve the pain point using technology. But the impact that they have and the value that they've created is ESG consistent. So again, back to my earlier point, which is the companies that we look for, ESG consistent or enhancing, and they are able to create sustainable value in the ecosystem at the same time. So that's, I think, the sort of the center theme that I'd like to bring out.
Thank you, Alfred. So back to Albert. I guess here or online, they are all like Cyberport community. So we have a really strong community of investors, of corporate, of technology innovators. So how do you advise us to like form a bigger ecosystem and work together to create more good companies, good solutions for the ESG ecosystem. Again, to support Hong Kong as a whole to grow ourselves and to excel in the international space.
Thank you, Victor, for the questions. I think Cyberport has been well positioned itself for digital entertaining as well as a supporter for the Web3 as well as on the blockchain areas. Taking examples like what Alfred mentioned, okay, blockchain is really a solution that helps to address some of the pain points of the carbon markets. I need not to tell too much about the pain points because I think Plato as well as Kane has mentioned that quite well. When you look at what the carbon market is doing for a time being, take it as a use case, you find that, well, it's quite manual. The supply chain is very traditional. It is a lack of transparency, poor data integrity. The whole supply chain is very manual. Now, you can imagine if we continue this kind of manual system to run a carbon trading, I need to say the carbon net zero is very good things to have, but the market is really, really not a good solution. Or let us say that it is perfectly an imperfect market. Now the solution here is the blockchain. It really helps to streamline the whole process. And with that, we can increase the liquidity and trading volumes. In that way, we can speed up our target timeline for the 2020 as well as 2050. Imagine if all the trading liquidity is really slow, how can we address this target? So Cyberport also play a critical role on the whole ecosystem. They pull in like the regulators, investors, like what we are doing on the CVCF forums, putting up other stakeholders together and helping the startups, providing the blockchain solution, technology solution to address some of the carbon market pain points. I do think, well, as a community builder, Cyberport is doing a very good job. I hope I can see more of this kind of events, try to put and navigating all those stakeholders all together and also with the governments. In that way, we can speed the whole process.
Thank you, Albert. So we only have a few minutes left, so let me ask the last question to Stephen. So I think we have talked a lot about the market and a lot of emphasis on blockchain. I know your company is focused on AI. So from AI perspective, could you share with us a bit of the uniqueness and like how your solution help address some of the challenge or even help firms to grab some of the opportunities from the ESG space?
Sure, I'll keep my comments brief. So I'll focus less on the technical aspects. I mean, we could talk all day about data challenges, validation, explainability, and all that. But I'll just focus perhaps on some of the applications and how we're deploying it in ways that our clients find useful. So the first one is, maybe I'll break it into three buckets broadly. So the first one is really about larger scale repetitive tasks that help, that are quite useful for technology. So for example, collecting some of the quantitative and qualitative data that I mentioned, mapping it to standard taxonomy. We have a news system, for example, that classifies news across the 26 SASB topics with additional tagging for financial materiality. So those are quite well suited for those types of tasks. The second type of application for AI is really around tools that help with the insight discovery process. So this is, for example, looking at finding ESG factors that matter and don't matter for the investment research process. So this could be finding relationships between, say, reducing carbon emissions and credit spreads, or higher rates of diversity, and maybe it's forward valuation. So these are some of the types of questions that we can answer using machine learning models. And these first two examples tend to be quite transparent to the user. They don't say, "Oh, that's an instance of AI," which is quite a nice thing. The third bucket is really around helping investors create that integrated research approach involving AI. And so this is where we can help scale up the human capital that I talked about previously, embedding certain human elements into the system with a feedback loop where their views are inserted in along with the quantitative and qualitative data that we have to create a more bespoke approach that's dedicated. Think of it like as a dedicated AI analyst that helps the investors. So that's a third application that that we've deployed as well.
So time is up, and thank you, Stephen. Thank you, Albert. Thank you, Alfred. Yeah, your sharing has been tremendously insightful, and really thanks for your time in joining us here. And I think that's the end of the FinTech section. And please stay tuned for the next session, and thank you again.